Well, let's talk now to Michael Field, who's European equity strategist at Morningstar. Welcome, Michael. Good to see you. So where are we, do you think? Are we coming to the end of this turbulent period, or are we perhaps just at the beginning?
It would be nice to think that we're right at the end, Robin, but I don't think that's true at this point. It's been a hugely turbulent week, obviously. Finally, Credit Suisse seems to have got its kind of act together, and it's got that injection it needs from the government. But again, if you look today at the share price reaction, it's down 10% again today. So there's obviously a cohort of investors out there who simply don't believe that news or simply don't want to take that risk on it, which would suggest that there's more to come from this story.
So going back to the financial crisis of 2008, banking regulations were brought in after that to try and stop anything like that happening again. Are those regulations working?
You know, given the week that we've had, it would be very difficult to say that they're all working fine and everything's hunky-dory. But there's some truth in that sentence that, look, we've been 15 years since the GFC. We've been through a period of very low interest rates when banks have kind of been struggling to make profits as a result of that. And we haven't seen any huge blow-ups yet. And the vast majority of the banks in Europe are very well capitalized. Credit Suisse, in that sense, is somewhat of an anomaly, and a lot of the issues that they've had are kind of self-caused.
So looking at those regulations, which bits aren't working, do you think? Where are the weaknesses that could be shored up?
Okay, well, I think for the most part, things are working and things are in order in that respect. I think where Credit Suisse has gone wrong in many ways is that they have a whole lot of profitable business, and they have an investment banking division that's slowly been failing over the last number of years. So while there's kind of credit limitations and things around that business to keep that in order, they've gone through various failures, and I think the regulations haven't really fully caught up with that in that respect.
And what about the banking system more broadly? They're very interconnected, aren't they? Banks bailing out other banks. Is that something that actually increases the risk of contagion, something that we've been talking a lot about in the last week?
It certainly is not a good thing anyway that we're relying on some banks to bail out their peers, as you just spoke about earlier on the show. The only thing I would say in defense of that, okay, in the US is that they've selected 11 high-profile, well-capitalized banks to bail out a much smaller bank and to inject that capital in. So the likelihood of something going wrong on that scale is low. But if we see more of this in the future, then obviously the risks just keep increasing.
So what happens next, do you think? We've said that perhaps this isn't over. What's the answer? How can we stem the tide, if you will?
I think certainly what happened during the week has kind of bought Credit Suisse some time at least. What they need to do now is kind of restructure and try to wind down that investment bank as quickly as possible and orderly as possible. And peers need to kind of reduce their counterparty risk to Credit Suisse, which has already been happening as well. So I think really what we take from this is that this whole situation has been a wake-up call to banks that they need to get their act together in areas where they haven't in the past, and they need to ensure kind of and restore that confidence in the banking system, if you will.
Michael, thank you very much. Good to talk to you. That's Michael Field from Morningstar.